Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the British pound and Brexit, where we go from here, and the potential trading opportunities that will continue to appear as a result of the Brexit issue. My name's Sasha and I'm a financial analyst from the research department at Fortrade. If you have any questions, please call us and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. First off, we'd like to introduce you to what we call a market opportunity. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple to understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions and based on historical evidence. This can relate to daily trading, weekly trading or monthly trading. A market opportunity consists of fundamental analysis, geopolitical events and technical analysis that includes a pivot point and support and resistance levels. It's important to understand it's solely your decision whether you trade on market opportunities or not. Here's an example of a market opportunity. Here you can see fundamental analysis on what's going on with the pound-dollar currency pair. Below you can see some geopolitical events that can influence the currency pair, such as the resignation of the UK Brexit minister in this instance, or positive employment figures in the US. It's important to look at the pivot point on which the calculations are based. If the price reaches this level you can see on the screen, that's 1.2840, this shows the right moment in our estimation to come in and open a trading position, had you decided to trade on this market opportunity when it was active. You can see that this is a weekly market opportunity, although we also have regular daily trading opportunities. You can see the trend direction here, which is down. It's important that you know how to use these stop loss and take profit options. You have support and resistance levels here. At these points you can put a stop loss and take profit, and on the right hand side of the page you have calculations. If you close the position using take profit, you can expect these kinds of profits at support 1, 2 and 3. And if the price is going against you, then you can have a loss of this amount shown at resistance 1, 2 and 3 in red. The pivot point is the starting price based on which resistance and support levels are calculated. The support and resistance levels here are for daily, weekly or monthly terms. Finally, profit and loss calculations are based on a one-lot trading volume. So the main factors influencing the price of the British pound. As you can see here, economic data, interest rates and Brexit. So, as with all currency pairs, major factors dictating whether a currency goes up or down is how well the economy is performing, or how analysts believe the economy will perform in future. Positive economic data above expectations tends to boost the price of a currency, while negative economic data generally brings the value down. Interest rates in normal times are probably the single most important factor on the value of a currency. Interest rate hikes, or the prospect of them, tends to increase the value of a currency, while cuts in interest rates produce the opposite effect. But these are not normal times for the UK. The most important factor for the pound at the moment is Brexit, and it's been that way ever since people voted to leave the EU in 2016. Traders know this, and the GBP USD currency pair is one of the most popular instruments to trade, as investors look to benefit by trading the news. So let's have a brief history of Brexit. In 2016, on June the 23rd, the UK held a bitter referendum which was expected to produce a narrow majority in favour of remaining in the European Union. However, almost 52% of the country voted to leave the European Union, while just over 48% voted to remain. Since then, the Conservative government, propped up by Northern Ireland's Democratic Unionists, has been negotiating with the EU, while the Conservative Party itself is divided. Those that want a clean break from the EU with no trade agreement are referred to as hard Brexiteers, and those that want to continue some kind of customs agreement are called supporters of a soft Brexit. There is a third group that continues to gather political momentum, who are pushing for another referendum that want to remain in the European Union. This division across the country in Parliament and the diplomatic battle with the EU has caused numerous trading opportunities, which has seen huge changes in the value of the British pound. So you can see here the reaction of the currency market to the Brexit referendum. Many economists predicted that the markets would not be kind to the British pound in the event of a vote for Brexit. On June the 23rd, 2016, the day of the result, the GBP USD collapsed by more than 11%. Similar losses were recorded against multiple currencies on that day. Since then, the pound has been very volatile, being far more affected by the Brexit issue than any other, although when two factors combine, pound currency pairs can move sharply. I'll give you a brief account of political developments of Brexit which have affected the markets, causing great movements in the pound, and then I'll go over a few other Brexit-related events that affected sterling. On this timeline, we can see what I showed you a moment ago, with the pound crashing over 11% after Brexit. The pound rose when elections were announced in 2017 over optimism that there would be a more unified government position on Brexit. However, elections were no help, since Theresa May's Conservatives won but lost their majority in Parliament, so the pound didn't recover so much as stabilise. In September 2017, the first step towards Brexit, the repeal bill, was passed, and you can see the pound grew in value against the dollar. In December 2017, the EU moved to its second phase of negotiations after the EU agreed on the Brexit divorce bill. The pound grew to its highest level since the referendum result. In March 2018, the UK and EU make further progress, causing the pound to climb further. But on April the 18th, Prime Minister May suffers an important defeat in the House of Lords. There are a number of points that Conservative Party rebels are very unhappy about, but hard Brexiters say her deal doesn't deliver what the referendum vote sought. They say her deal would leave the UK subject to EU rules, but without any say about those rules. The backstop is the solution offered to Northern Ireland. Northern Ireland is part of the UK and will leave the EU, but shares a border with the Republic of Ireland, which will stay in the EU. The EU has border posts with non-EU countries, and Ireland has a troubled political history, which involved years of killings and terrorist attacks by paramilitaries. The building of border posts runs the risk of reawakening national tensions, and some fear the return of paramilitaries and terrorism. The backstop is an insurance policy to ensure there is no hard border, even if no formal deal is reached on trade and security. But it would mean that Northern Ireland would stay in the EU customs union, which meant that some kind of border would exist between the UK and Northern Ireland. So, the current situation. In December last year, there was the first Brexit withdrawal vote in UK Parliament. This was roundly rejected by MPs. Prime Minister May secured a slightly revised agreement with the EU, and this was again defeated by Parliament on March the 12th. We can see how the pound reacted, as some optimism regarding the deal pushed sterling to high levels in the days before the vote, but as news emerged in the hours before the vote that many Conservative backbenchers, government allies such as the Democratic Union Party and the official opposition, the Labour Party, would not accept the revised deal, so the pound slumped by 1.79% against the dollar. You can see that on the left-hand side of the screen. The next day, March the 13th, UK lawmakers debated again and rejected a no-deal Brexit. The markets welcomed the move and the pound jumped. The GBP USD currency pair moved sharply higher, gaining 2.36%, as you can see in green in the center of the screen. You can see here on this one-year chart how this 2.36 rise in the GBP USD marked by the red line pushed the pair to a 9-month high on the far right-hand side of the screen. Well, on March the 14th, UK MPs voted to extend the Brexit leaving date of March the 29th. The pound wasn't as volatile in previous days, but had Parliament rejected the leaving date, it's highly likely the pound would have crashed. It was expected that May would put her rejected agreement to MPs again for a third time after some arm twisting. But on March the 29th, her deal was again rejected. On to most recent developments. Prime Minister May was considering taking her deal back to Parliament for a fourth time, but on April the 2nd she announced a significant shift in her Brexit policy. Prime Minister May will seek another extension from the EU to delay Brexit, and in a sign of her impatience towards her own divided Conservative Party, she is also trying to agree a common position with Labour leader Jeremy Corbyn. The Labour Party favours a customs union agreement with the EU. As you can see here, the GBP climbed against the dollar, jumping 0.88% once the Prime Minister announced her change in policy. Since then, there is increasing optimism that the UK will avoid the worst-case scenario of a no-deal Brexit, so the pound is reacting as we would expect. What does the future hold? Theresa May will have to go back to Brussels again. The EU is in no mood to take part in the UK's Brexit charade, but the EU is highly unlikely to let the UK crash out of the EU without a deal. The Prime Minister favours another short extension in the leaving date, but the EU may simply inform May of their own preferred date, perhaps a longer extension. Theresa May and Jeremy Corbyn are now working on a Brexit compromise that could potentially go before Parliament to be voted upon by British lawmakers. But both May and Corbyn face difficulties from their own party members. Conservative MPs supporting a hard Brexit are angry and are growing more rebellious by the day. Some Labour MPs are putting pressure on Corbyn to push for another referendum in order to remain within the EU. So a potential deal could face opposition on both sides, and that's without even taking into account whether the EU would agree to a newly hammered out deal. All scenarios remain on the table if a compromise on Brexit with Labour fails. There could be another vote of no confidence, which could lead to a new Prime Minister, or a general election, or a referendum on EU membership could take place. In any case, Brexit has provided investors with many opportunities to trade on pound currency pairs, and there is no sign that this will change, so continued volatility is to be expected. Well, I hope you found this webinar useful. Of course, at 4Trade we'll be following ongoing Brexit developments and other factors that affect GBP currency pairs. So please get in touch with your senior account manager for further information. Until next time, goodbye, and please join us at 4Trade again soon.